Hey everybody, this is Lorelia coming to you with a video today. Want to talk about a very popular topic that has been going on around the internet, and that is about purchasing a car in your business name. Now, I'm going to give it a different spin to it because I primarily help real estate investors or those who have a real estate business get leverage business credit to do more deals. And so that's why I titled this video, How Your Real Estate Company Can Help You, or I forget the title I put, How Your Real Estate Business Can Buy a Car. Really simple. So let me start by saying I'm not new to this topic. Primarily, I talk about personal credit, business credit, leveraging to invest in real estate. So far this year, I think we are now at the 500,000 mark in terms of helping individuals leverage business credit and business funding to do more deals, to invest in real estate. So this is something that I do. It's not based on theory. I don't just teach people how to, build business credit, but then leave you with the still not what people really ultimately want, which is the funding. At the end of the day, people want the lines of credit, they want the loans, they want the money. And so when you start to talk about buying a car, and once again, using your real estate business to be able to do it, what are we really talking about? And that's what I want to talk about today. What are we really talking about? So, ideally, what people really want to do is they want to have the ability to go into a car dealership, get a car, and they do not want any type of personal guarantee on the finance statement, whether you came in the dealership with your own financing, meaning you got an outside company to give you financing, or you are using the financing that the dealership gives you. At the end of the day, a person doesn't want no personal attachment to the financing statement. So let me unpack what it is that a lot of people aren't discussing, because a lot of the information that's out there are from the standpoint of those who are established. That's right now in the business credit, really world, we have a lot of people who can appear and will say, hey, this is what I've been able to do with business credit. I'm buying these houses, I got these cards, and by all means, it may be truthful. They may have really did it. But now, can they translate that to you? Can they help you do it? So what happens is that they give you information from the standpoint of where they are right now. So right now, they may have a business that is generating revenue, has income coming in, is documented in terms of on their financials. They have bank statements. They have good personal credit. At the end of the day, they have a history, whether personal or from their business, of some type of loan activity. Now, what do I mean? Let me just take off the ringer of my phone because it's going to get good. You are looking for your real estate business to get a car, and you don't want no personal attachment to it. What are we talking? Are we talking just the titling? Because we know that if we're not buying it outright cash, there's going to be a lien on the car. Now, this is whether you're personal or a business. If you've ever purchased a car before and you had to get financing, we know that there is a lien holder onto that car. You don't get the title until you pay that car off. So when you get your registration or what have you, some way up there, it is going to show that there is a lien holder attached to that car. Now I'm going to take you do the loan process so you all can understand, so you all can really get what it is that you're trying to do, and really be able to recognize where you are in the situation. Because what happens is that a lot of people are hearing these sound bites and they really don't know how the whole picture comes together. It's the same way what I talk about with the funding. People are looking to get 50 and 75 and 100K in funding, and they want it just in their business, but their business doesn't have any financial credibility. But you want somebody to lend you money north of 50K, and there's no financial credibility, no business credibility. So a lot of the people who are talking to you, they have that in their business. They have that. They have the financial credibility, they have the business credibility. So now they can go ahead and say, "Hey, I bought a car in my business name," and then it's leaving you puzzled and like, "Well, what am I doing wrong?" And that's why I did a video on to get it's easier to get more funding in a shorter period of time than it is to get a little funding in a longer period of time. And the reason why I say that is because most of the methodologies that are out there in the marketplace will not really help a person get to where it is that they're really going to get to. And I know I'm saying a lot, and I'm going to go back to the buying the car strategy, but you need to understand what is it that lenders are looking for. So let's go back to the car buying strategy. So you have a business, you have an LLC. Let's just say you are, because the person who has something versus the person who don't have something, story going to be different. So if you are a business owner at ground zero, what is ground zero? All you have is an LLC. All you have is a name of a company. But you're not generating no revenue. Your LLC has no revenue. It's generating no income. You have no business credibility. Your personal credit is iffy. And you're looking for someone to give you a auto loan in your business name, and you don't want no personal guarantee. And then you're trying to figure out how this is done. What you're going to end up doing is continuing to chase your tail. Let me tell you what you need to work on, what it is that lenders are looking for. At the base level, this is what they're not telling you. Every lender is different. There's no one way to do it. What a credit union would require of you to get a loan would be different than a top tier bank. Understand, in here in the USA, the banking system is tiered. There are tier ones, tier two, tier three, tier four. Credit unions, don't make them bad. Financing is good, great options, but they're tier three. And then the tier ones are the Chases of the world, in no order, because I don't know, the trillions of assets they have under management, but the top four are Chase, BOA, Wells Fargo, Citibank. Those are the top four. So the process of what it's going to take to get financing from those entities versus a credit union is going to be different. Let's just start there. So the idea that there's one blanket way of doing anything is already the wrong starting point. What you need to look at is, once again, the financial credibility of you and yourself. And let's start there. Let's take the person, and most people want to say the determining factor is credit score. And I always say it's not credit score, it's within the credit score. What makes up the credit score in terms of the type of loans and activity that you have? Now, if you have a 700 plus or a 750 credit score, and the only thing you have is a credit card and a first premier of $300 to $500, and you are looking for a auto loan, it is definitely possible that you will get it, because we know lenders have no problem with getting you an auto loan, but you're not going to have the best terms. You're not going to have the best terms. So your interest rate may be a little high. Why? Not because the score, but because you have no other activity showing that you've ever paid a loan. You don't have any term loans. You don't have no other auto loans that you've paid off. Because remember, we're doing a profile of the person who has they have no business revenue. They have no business credibility in terms of finance. I mean, in terms of their financials, their revenue, or what have you. But they may have credit. But let's look at their credit. Their credit may be 700 plus credit score, but then the information within the credit score just shows two tier 4 credit cards. You are not going to get the best rate. So now you're going to the dealership, and you may have to, once again, whether you don't want to get the financing from the dealership, or you want to go ahead and get your own financing outside and come there with the check, you may have to go full doc. And what is full doc? Full doc is when the lender is going to ask you, because you're saying, hey, Mr. Lender, I want my business to have a car in its name. Okay, no problem. How much revenue has your business brought in? Nothing. How much, what was your annual revenues last year? Nothing. What is your personal credit score? Oh, it's 700. Okay, well, have any, is there any history on your credit report of any loans that you've bought? No. But then you are wondering how you're going to get this loan. Well, that is when you have the personal guarantee. And it doesn't mean that you personally guaranteeing is a bad thing. It is just showing to the lender, because once again, you don't have the business credibility. So now the only thing they have to go on is your personal credibility. Now let's start from there. We know the business credibility. So now they're going to ask you, okay, well, do you have a job? No. Do you have any source of income as an independent contractor or anything? No. So you are zero on your personal. You are zero at your business. You have the 700 credit score, but you have the low tier credit cards. And you want a lender to give you 30,000, because most cars are like at least 35 or more, and just your business name and no guarantee. And that, my friend, is why people are making it hard for themselves to get funding, because the people who are telling you how what the process is to get a car in your business name, like I said, they have something there. They have business credibility, they have financial credibility, and now you can do a few things. So now that we've looked at the determining factors, because the reason why I said all that is because at the end of the day, people do not know what it is that lenders are looking for. The great thing about the lending industry is it's black and white. Like, it's no gray area. But the people who want to sell you on building business credit want you to believe there's a gray area. And that gray area only really exists to sell you a course, which is why you're left with still not getting any funding, because you believe that it's a gray area. I mean, we live in a day of AI. You can go onto a computer, onto a website, put in some information, boom, and have a pre-approval right there. They don't need to talk to you. They don't need to know, do you have a Dun and Bradstreet or a paydex score? They just need a few essential things about you to determine if you are lending ready to get a car. It's black and white. It's not gray. It's not gray. So I understand that right now there's a big conversation of you going into a bank, bringing your own check, don't go into the bank, using their financing, coming in with your own financing. But what I find is that people still, thank you. People still don't know what it is that lenders are looking for. And the fact that they've been sold on this gray area, it leaves them thinking that the process is hard. That's why I say it's easier to get a lot of funding in a short period of time than it is to get a little bit of funding in a longer period of time. The reason why is because people want to make the process hard. So now, for the person who says, I have financial credibility in my business, Aurelia. I have that. I have, favorable credit. I'm not even going to do scores because I've seen clients that I've worked with have low 700s, high sixes, and have been able to get high funding approvals bigger than the people who had a 750. So it's not score. I know they want you to think that it's score. That's why I hear people like, oh, I'm trying to get an 800. By all means, everyone has their own personal beliefs when it comes to scores. At the end of the day, are you in the trenches actually doing anything to leverage your score? So now let's start with, like I said, the person who has some financial credibility in their business, meaning it's a real estate business. Maybe they own some assets, they own some real estate, they have documented revenue, documented income, and now they have favorable credit. Like I said, we're not talking score, we're talking about meaning that they have a history of buying cars. And it could be in their personal name. There is some history on their credit report that they've bought a car and that the history is good, or that they've had some type of term loan and they've paid that on time. Now, the conversation to be able to now get a car on the strength of just the business, the conversation is now different. And it really just depends on the lender. Every lender is different. Some lenders who know you have some credit, meaning you have financial and business credibility, meaning revenue, income, you can show it on tax returns, it's documented into your bank account. I mean, think about it. The bank that you bank in, if you have a business and there is some place you are putting your money in, I would hope that it's a place where you have a lending relationship with. They will see, just by putting in your account number, what type of deposits and activity is going on there. So you have that. Then they look at your personal and they like, oh wow, this person bought a car before, even though it was in their personal name, but they paid it on time, or they're currently paying it on time. They have no lates. There's no late pays. They don't have no repossessions, no voluntary repossessions. Now, when they say, okay, I'm going to be looking to get a car in my business name, I want, everything finance under my business, the conversation is different because they know that there's some history there. And so now they will allow the business to get a car in the business name. But if the business doesn't have a history of buying a car, they may ask for you to PG. Don't mean that it's going to show on your personal credit report. It just means that they want you as a person to say that you In the event that the business shuts down, the business is not making no money, you're going to come in and pay it. Let's really just unpack what personal guarantee is. But right now, we are in a time and place where people are trying to get a lot for nothing. And I always tell people, if you're trying to get access to business funding, business credit, and the conversation of personal guarantee gets under your skin, you may not be someone I want to work with. Because what that tells me is that you're looking for a way to cut yourself off responsibility. And that says a lot about a personal character. And I know I'm going to step on some toes with this one, because right now in the marketplace, that's the big buzzword. Oh, get business credit, get business funding, don't attach it to your social security number. Nothing with your personal. And in the event that you trick off on the money or whatever it is, it ain't attached to your personal. But you know what? Nah, don't even come to me, because I feel like this. If you are honest with what it is that you do, and I tell my clients, sky's the limit on funding. Like, there ain't no cap on funding. Even with all the things that are going on in the world today, with the pandemic and the stimulus and Afghanistan, there is no limit on funding. Ain't no banks made a call and a run on the funding. But the one thing that is certain is the fear mongering and the scams and reason. And I don't really used to like to use scams, but the fact that people will coerce people into, let me help you get a whole bunch of funding, and then you can trick off of it on it, and it ain't no responsibility. I'm not your person. I'm just not. I'm just not. So I say all that to say, in terms of the personal guarantee, just because you are signing your name to give your oath, because you're signing your John Hancock's on it, doesn't mean that it's going to show on your personal credit score. Because at the end of the day, the reason why my clients can get the 75, the 80K, the 100 or 150K in funding is because at the end of the day, the personal guarantee. There's nobody out there that's going to assist you or help you build your business credit, and no personal guarantee, and you're going to get over 50 to 100K. Eventually in time it may happen. But if you have that much time, by all means, continue on the road. But that's why I'm telling you, many of those who are showing you, if you notice right now with the business credit and the business funding space, many people will say, hey, this is what I got. But there's never no results of the other people of what they've got. That's why I'm very big on showing you regular people leveraging credit and being able to use it to fund or purchase real estate. And many people have asked, well, I can do that myself. Okay, I'm not here to convince you. I tell people, if you know how to get yourself 100K in funding, then do it yourself. Like, you don't need to convince me. People come to me and they want to convince me that they know how to do it. Then do it. But going back to the title of this video, buying a car for your real estate business, it does depend on those things. That's why I said it's easier to get a lot of funding in a short period of time than it is to get a small amount of funding. Because the reason why is because so many people focus on things that are hard. They don't want, and this is the trickery. And understand this, the reason why people want to focus on what's hard and they don't want to think it's that simple, because they can't live with the fact why they couldn't have figured it out. Because they're thinking, if it was so simple, if it's that simple, I should have figured it out. And I can't speak on that. I don't know why you have not figured it out. I don't know. But that is what stops people. So the fact that they have not figured it out, they would rather keep spinning their wheels, doing all the business credit gymnastics with the Dun and Bradstreet and the Paydex scores. Imagine if you can get all the funding that they say that you can get with just the LLC, we can eliminate poverty in the US. Think about it. Just tell a whole bunch of impoverished people in the US to go ahead and get an LLC, and a bank is just going to give you funding only on the strength of you just having an LLC. We've eradicated and hunger. Nobody would have any problems if it was that easy. And that's not it. So it saddens me when people just say, "Hey, I have an LLC." Here in New Jersey, LLC costs $125. So you mean tell me with an LLC for $125, that's all I need, and then a bank gonna give me 100K. And once again, and that's with me not doing a personal guarantee. That's with me not leveraging my personal credit. That's with me not having no business revenue. That's with me not having no business income. But just the strength of me having an LLC, boom, I'm gonna get some funding. No, it's not gonna happen like that. If that's the case, I could sell you the Brooklyn Bridge too. So the point that I'm making is understanding what are the measuring things? What are lenders looking at? What is the measuring stick in order to get your real estate business to be able to get a car loan? And I went over those things. It's going to be the financial stability of the business or the financial stability of you. And then also, what type of history have you had with buying a car? That is it. That is it. So for those who are trying to do this and know they are at ground zero, it is no shade on them, but understand that there's work that has to be done. And what happens is that people are taking the ground zero info and trying to measure themselves against people who have the receipts, they have the income, they have the revenue, they have the financial stability, they have the business stability. On the personal side, they have all those things too. Boom. Their process to get a car in their business name is going to be totally different than for you who got some work to do. You got a repo on yours. You know, you may have never bought a car. You don't have no history of any loans on your credit report. You don't really have a job. You don't have no business revenue. Come on. It's not the same measuring tools. So once again, I'm always going to tell you, as Pastor Jamila always say, I'd rather tell you a hard truth than a soft lie. And that, my friends, is, you know, that is the truth behind it. Every lender is different. There ain't no one way, but also I put all that out there to know the person who asks the right questions is the one who will get the right answers. So once again, if you are a real estate investor, a professional looking to get access to 5 figures, 6 figures in funding, I think right now the highest funding amount is a client of mine based out in Georgia. We got him over 150K in funding. Um, if that sounds like you, if you are someone who understands that there's work that has to be done um, in order to be able to get the funding approvals that I talked about. This is not no free lunch. This is no illegal strategies. It takes work. But the one thing that I'm certain for is that you can't unlearn what you've learned. And that's really it. A lot of people are they're just going by the wrong rule book. And the rule book that they're playing from is giving them misinformation and it's outdated. So once again, this is Lorelia. Um, Ronald, you said, what about the C Corp? I just saw this question. Is there a difference? It goes back to, is there any business or financial credibility within the C Corp? Is it just a C Corp? Like right here in New Jersey, it only costs $125 to set up a C Corp. So what are we talking about with the C Corp? Does the C Corp have any history? Meaning, of course, I'm going to say has a bank account. Um, but then is there any revenues? Is there any income? What does the activity look like in the banks in the bank account for the C Corp? Can the C Corp stand on its own financially? It's not just the entity, because that is what a lot of people are confusing you all on. They have you all thinking that you're just going to get funding on an entity. No, it's an entity that has financial stability. Can it stand on its own? And so if it can stand on its own, that's great. But now they're going to look at, okay, well, has the C Corp ever had any loans? So if the C Corp has never had loans, they may ask you to come in and do a personal guarantee. Not that it's going to show up on your personal credit. It will still be part of the business, but they want you to do a personal guarantee to just say that in the event that your business um can't pay, that you can pay. There are shares set up. I don't know what you're saying. There are shares set up for offerings. Ronald, I don't know what that means. There are shares set up for the offerings. I don't know. I guess you're saying shares. Okay. Once again, let's talk revenue. Shares just has to do with when you set up a C corp. They say how many shares does the owner have. Ronald has 50%. Priscilla has 25%, and John has another 25. The shares don't mean anything. What I'm talking about, Ronald, is in terms of how much revenue did the C Corp bring in for the month of August? How much revenue did the C Corp bring in from January to August? How much annual revenues did the C Corp bring in last year? What type of financial activity did the C Corp bring in? So shares just has to do with the company. That just means that, hey, if you want ownership of my C Corp, I'll give you, and you give me 10% money. A certain amount of money, I'll give you 10% of the shares. That's something totally different. Has nothing to do with you going to a bank and getting financing for your car. They don't care what the shares are. Great questions though. Thank you, We the Brutes, for commenting on the channel. If you are watching the replay, just want to let you know my name is Lorelia. Primarily talk about helping real estate investors or professionals leverage six figures, 5 to 6 figures in funding, using credit to do more deals. Um, Ronald, the best way to reach me is on the website. go to www.neverloseadeal.com. That's the best way to reach me. Or underneath this video, I'm not sure. I think, yeah, you're on Facebook. I think Facebook does put the link, or you can go to www.helpmegetbizcredit.com. And there we can schedule, you can schedule a 30-minute session for us to have a conversation on how I can assist you. So, I think that's it. I know there's a delay. So, Ronald, if you go to www.neverloseadeal.com, that'll put you on my email communication list, or www.helpmegetbizcredit.com. My goal is to bring you more information like this to really uncover some of the funding snafus and the reason why. Thank you, Drexel Harris. I'm glad that you got clarity with the explanation. Yeah, I mean, a lot of that's what I'm saying. Like most of the information, it's leaving a gray area. And I talk to people on a daily basis throughout the week, and that is the reason what's holding them back with getting the funding. They want to believe that it's gray, and it's not gray. If it was gray, you wouldn't have the ability to right now go right online and get you any type of loan you want. You can get a car loan, you can get a term loan, you can get a business loan, and the reason why is because it's black and white. You either have it or you don't. And even if you lie about it, they can find out. Like AI is real. That's why I'm saying these tricks and strategies that they're teaching people were things 20 years ago when it was a little more difficult. Would they eventually get you? Yeah, but it will take some time. Now it's immediate, man. The paper trail is real. You will get yourself in a jam. Exactly, Drexel. People don't want to do the work. And those who are promoting it, they have the money, they have the resources, they can hire an attorney, and then you stuck in a jam. And that's why people are so confused, and then they want somebody to help them undo their confusion. And when I work with a person, my goal is not to undo your confusion. My goal is to cleanse you, because in order for me to get you where you need to be, the 5 to 6 figures in funding, people are always asking, they're always asking, how did that person get 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 $80,000 in funding? How did that person get 100? What was their credit score? Like, if it had nothing to do, the credit score, let me just clear, credit score has something to do with it, but it's not what people are thinking. And I always say it's more about who that person is, because the information that I share with people is so counterintuitive with what's in the marketplace. And I'm going to tell you, and I'm going to be honest with you. I know I said I was going to wrap this up, but I'm going to just share this with you. If you're working with someone who's assisting you with getting funding or getting credit, and it's not counterintuitive, meaning different than what you're hearing in the marketplace, run, because none of that stuff is there. And so most people come to me and they want to take what it is that they think they know. I got an LLC. I got a paydex score. I'm doing something with Dun and Bradstreet, and they think they're going to start there, and they don't know that that ain't where we need to start. That ain't it. So when a person asks how did they get the funding, it's because that person decided to retreat to the process and follow what it is that my lead to help them. Has nothing to do with the credit score. The credit score has something to do in terms of getting the funding, but there are steps that have to be that's due before we can even get to that step. But Drexel, you are right. That's the problem. People want, yeah, they don't want to go, they don't want to do the work. They think it's really, like I said, they think that it is a gray area, and it's not. Yep. I know there is a delay, so if um if I have any more questions, I will answer them. Other than that, like I said, you can go to www.helpmegetbizcredit.com or www.neverloseadeal.com. So that's all I have. Thank you for joining me. I know I was going for about 40 minutes, but thank you for watching it. And thank you for those who will watch the replay. And that is it. It's no gray area. When you decide to remove the gray area and say, hey, it's only black and white, that's when the floodgates opens up. And that's why the clients that I work with, when they see how easy it was to be able to get the funding, they like, wow. I didn't think I didn't think it was that easy. But like I said, I know what holds people back is that they're looking for it to be difficult because they feel like if it was this easy, they should know. And this is the one time I'm gonna tell you right now, the business credit industry, even with the lenders, it's there to confuse you. The reason why it's there to confuse you is it's not monitored by the FTC. The FTC monitors consumer credit. So with consumer credit, you have to be very cautious of what you say. You cannot offer people guarantees. You can't do this, you can't do that. But business credit doesn't fall under that because you are a business owner and your business is at risk. And so, unfortunately, FTC doesn't really have a strong hold on the business credit industry like they do on the personal credit industry. Personal credit industry, you got the Consumer Financial Bureau, Protection Bureau, you got the FCRA, you got the FDCPA, you got the FTC. You have all these governing bodies who are going to oversee what's there. You got CROA for the credit repair organizations, but business credit, there's no overseeing body. And so that is why people can tell people, hey, I'm going to help you build business credit. Look what I got. I got a fancy car. I got a big house. I got all this other stuff, but they can't help you get it because they know they didn't get it by no Dun and Bradstreet and no Paydex score. They know that. They know they leveraged their personal credit and accumulated all this, but they gonna tell you that's how they did it. And you looking like, oh, my day is coming. One day I will get it. And you, next thing you know, it's 3 or 4 years later and you still ain't got nothing. So rather give you a hard truth than a soft lie. So once again, this is Lorelia. I am signing off. Look forward to talking to you in the next video.